Thanks everyone for being here. Just by way of introduction, I'm a non-executive director at Metminco. With us today, we've also got William Howe, who's the MD and the CEO. Spent a bit of time with, sort of up here today, telling you guys about the project and what we're up to and where we're up to. So, a bit of a disclaimer, and you've all seen this before. Just by way of history and by way of a quick update, we are a ASX and AIM-listed gold exploration and development company with a portfolio of assets located in Colombia, probably about 5 hours away from Medellin. We picked up this portfolio of assets early to mid last year from a TSX-listed company called Seafield Resources. We got the portfolio at a great price. The company has been focused since then on effectively a two-pronged strategy, mostly sort of developing a feasibility study for our main asset called Miraflores, and obviously sort of looking to continue our pipeline of exploration and exploration assets nearby. In terms of our asset portfolio within Colombia, Miraflores is our main asset, and we've effectively spent the last, I'd say, 12 to 15 months sort of doing the scoping study on that asset. We had some good results coming out of that, funded the feasibility study, and have spent the last 12 to 15 months developing the feasibility study, which we've just put out to the market about 4 to 5 weeks ago. And I'll go through some of the detail around what the outcome of that feasibility study was. From a main Miraflores Gold Project perspective, the project will deliver about 45,000 to 50,000 ounces on average per annum for a 9.5-year mine life, generating about $30 to $35 million of EBITDA per annum. That's US dollars. I'll go through some of the specifics of the actual feasibility study shortly, but the real story here is in the portfolio of exploration projects. We've got a number of projects located near our main asset with extremely good potential. Now, as I said, I'm non-executive director in the company. I joined probably sort of March, April this year as a result of an investment that I made in the company through my old fund. And I'll talk to you guys a bit more about the reasons for us doing that and the value and the valuation of the company and where we see the potential of that going. So why Colombia? I think that the days of Colombia being regarded, if any of you guys have watched the show Narcos, those days are long gone. It's actually a jurisdiction that's quite compelling to do business. From an economic and political perspective, there's been a lot of transition in that company over the last year or 2 years. One of the main paramilitary groups there, called the FARC, has effectively been demilitarized. The government reached a peace accord with the FARC, and that was ratified in December of last year, and that process continues today. Interestingly, the country was running a budget deficit, which has obviously been a result of funding the war with the main paramilitary group. That budget deficit has come down now that the actual peace accord has been ratified, and so the government has been able to use a lot of those funds and redeploy them into the country itself. Again, from an economic perspective, there are about 40 different infrastructure projects being run within the company today, within the actual country today. The government's developing about 8,000 kilometers of roads and planning to spend in total about $30 billion of investments over the next few years, in fact, before 2020 within the country itself. And so a lot of that funding that was effectively going into fighting the paramilitary groups over the last year has now been redeployed and will be redeployed into infrastructure within the country. There's strong support for mining and mining investment within the country. I think from a foreign and a local perspective, foreign individuals and corporations actually have the same rights as Colombian individuals and corporations within the country under mining law, so certainly there's support. The government's committed to expediting permits and approvals and to eliminate illegal mining, so there's a lot of support from a government perspective to advance the cause of the mining industry. Again, I'll spend a bit of time talking about the geological potential within the country as we actually go and get to our asset portfolio. There's established infrastructure and good access to labor within the country. In fact, Colombia is South America's second most populous country with about 49 million people. They're all qualified, and it's a very cost-competitive labor force given where the currency has gone. Now, the interesting thing to note here is that historically Colombia has not been very well explored from a mining and from a gold perspective. And now, as that cycle starts to turn, and as we sort of get into the front run of sort of the gold rush, that's starting to change. It's obviously as a result of the large potential that people see within the country itself. Our view is that over the next 10 years, right now Colombia is down there in terms of the actual production. That should start to move up as you start to see some of these large deposits and large porphyries getting explored and getting developed, constructed, and up to production. So, it's been historically a bit lackluster in terms of exploration, but that under exploration should start to change over the coming decade. And so, certainly, the view is that we'll all start to see Colombia picking up as a major gold mining jurisdiction over the coming years. Now, in terms of our location and where we're located, what you'll see here is we are located in the Western Cordillera Andean Belt, and that's sort of running up and down there. There are two companies that are producing at the moment. Gran Colombia with Marmato, doing about 15 million ounces, and the other one? San Ramon with Red Eagle. So they're in production now. The guys at Continental Gold Portfolio are under construction. The interesting thing to note within this actual belt, it's home to some very large porphyry systems, very, very large ore bodies under the ground. You can see AngloGold with about 30 million ounces under the ground, Gran Colombia with, again, 15 million ounces. So that entire region is home to some very large deposits. Certainly from our perspective and given the exploration assets that we have on hand, the expectations that over the coming years as we start to drill those and explore those, the actual potential for us to get into some of those deposit systems is quite large. From an investment perspective, there's been a fair amount of activity for a few years within Colombia. Again, as I mentioned, Continental Gold, that's constructing their project now. They're financed by one of the specialist mining houses, Red Kite. Orion is another specialist mining house based in the U.S. That have financed Red Eagle. Mubadala, who are the UAE-based, one of the UAE-based sovereign wealth funds, has dropped almost $1 billion into the country, and we actually met with them last week, having a discussion about our project and the financing for our main project, and their view was, again, a great place to do business, a great place to invest, and continue deploying capital into. Continental Gold recently had a strategic investment by Newmont. They took about 20% of the company at a 45% premium to the closing price. So certainly, from a strategic and from a financial investment perspective, there's a lot of interest. And so, from our perspective, given that our primary objective, and I'll talk a bit more about that as we get to the asset, given that our prime objective is to develop and construct and finance the Miraflores project, certainly that's a good thing. So, in terms of our portfolio, we've got about 11,000 hectares of concessions that we own and that are pending. Again, 100% owned. For the Miraflores project, a total resource base of about 840,000 ounces. Again, we just put out our feasibility study. On a proved and probable basis, about half, so about a 50% conversion ratio there, running about 450,000 ounces proved and probable reserves. Dos Quebradas, again, another deposit that's close by, with about 1 million ounces on an inferred basis. The real story here isn't Miraflores, which is the main asset that we'd like to construct and get into production. It's really some of the large porphyry deposits that we have sitting below at Tesorito and at Chuscal, and I'll get to those as we get down the presentation. In terms of upside and blue sky potential, these deposits are effectively sitting down into that porphyry system there, and there's potential for multi-million ounces under the ground, anywhere between 10 and 20 million ounces as we start to explore and drill. Now, in terms of our feasibility study, it's demonstrated fairly robust economics. Total capex spend at Miraflores of about $72 million US, excluding contingency and before optimization. The current plan contemplates a 9.5-year mine life, producing roughly 50,000 ounces per annum. I'll go through the actual mine plan and mine design, but from a recovery perspective, 92% after all of the circuits. The average grade going to the mill is about 3.3 grams per ton, and again, sort of 450,000 ounces of proven and probable reserves, with a payback year of 3.6 years, and an after-tax NPV just over the capex amount on an 8% basis. Now, the interesting thing to note is our cost structure. Given where we are, our total all-in sustaining costs sit at around $650 per ounce. And it's quite interesting because, as you can see here, this is the sort of the global cost curve. As you sort of get up there, you can see where that cost curve starts to intersect the current gold price and where the average gold price has been. So once we are in production with Miraflores, our margin is certainly quite substantial and obviously able to withstand any buffers. There's enough buffer in there to withstand any sort of gold price declines. Now, the real challenge for us is going to be executing and delivering on this $643 an ounce. But again, I think we've got the right team in place to do that. This is what the actual plant layout looks like. And sort of the things to note here, as you can see, it's a fairly vertical face down the side of the mountain from top to bottom. It's a very simple mine design. Again, it's an underground mine. The main mining method is long hole stoping with backfill. It's got a very low impact on the actual surroundings, small footprint given that it is an underground mine. The ore is processed, as I discussed before, via sort of a three-stage process: gravity and float con, followed by cyanide leaching. The crusher is a three-stage crusher, and it's actually sized 3 times to be able to handle 3 times the volume. And the reason for that, so that's up to 1.5 million tons per year. And the reason for that is because as we start to develop and explore the other assets, the exploration assets nearby in Tesorito and Chuscal, the intention for us would be to drill and extract the high-grade veins, effectively that ore from the high-grade veins, and truck that into the plant. So the front end of that plant, in terms of the crusher, is sized to do that. And we can always expand on the rest of the mine design to be able to handle extra tonnage. In terms of the gravity separation circuit, the recovery there is between 60 and 70%. The mine will do about 1,300 tons per day, or about 500,000 tons per annum. And the final product, as it's currently contemplated, is going to be doré, although we do have an ability to sell concentrate if we want to. Again, just sort of a brief overview of what the feasibility study has put out. All-in sustaining costs of $643 an ounce, as I discussed before, spitting roughly $30 million of EBITDA per annum, with a after-tax NPV at 5% of 96.1 and an after-tax NPV 8% of 72 million. We're running out of time. Now, just from a strategic perspective, in terms of what we need to accomplish, we've got the feasibility study in hand. We've been having discussions with financiers as to the financing of the project, and so we expect sometime, over the next sort of 2 to 3 months, we should have those discussions in place and a funding package in place. The current intention would be to do a mix of project financing and equity financing, and so at some stage in the coming months, we should be putting those details out. Now, in terms of the gating items for the Miraflores project, the EIA, which is our environmental and social permits, we apply for that sometime towards the end of the year, and we would expect that to be granted by Q2, probably say towards the tail end of Q2 in 2018. So the current intention would be to effectively have the discussions with project financiers and debt financiers, get a funding package in place that's effectively subject to certain conditions precedent, including the granting of our environmental and social licenses. And following that, we can start the construction. Assuming that happens according to plan and according to schedule, we would expect our first gold pour to be sort of the first half of 2019. So certainly from a production perspective, a near-term production profile. Now, I sort of wanted to go over a couple of points on the valuation. We are valued quite low. If you look at us from an enterprise resource on that type of basis, we're trading right now around $7 to $7.1, and that's Australian per resource ounce. If you compare ourselves to other pre-production companies that in fact don't have feasibility studies out and aren't in the process of financing and getting construction done, we're certainly trading quite cheap. And again, the screen that we've done here is just to mirror our assets as much as possible. So from a valuation perspective, the company, the list co is trading extremely cheaply. The interesting sort of analysis that we've done as well is if you look at where producers are trading, assuming that the main project gets constructed and up and running, there's a substantial uplift, certainly about 10 times. And so if we're able to get the project constructed, financed, and producing, you can get a sense for where that re-rating of the stock should happen. Now, I think I'm just out of time, but I will sort of end up by saying, in terms of our exploration assets, as I mentioned, Miraflores is our main project, and that's the big breccia system here. Tesorito and Chuscal, located within large gold porphyry systems. The interesting thing for us to note here is that both Tesorito and Chuscal are quite close to Miraflores. And so as we develop the actual plant here, which sits about halfway there, the intention eventually down the line as we start generating operating cash flows would be to get some of that ore from Tesorito and Chuscal, truck that over to the main plant, and increase the mine life and increase production. And that's how we would intend to generate value. I'm just out of time here, so I'll leave it there. Any questions we can address to William Howe.
Okay, thank you very much indeed, Ram. Yeah, pass the buck on the questions. Do you have any questions, please? Any hands up? I'll kick us off if I may. You mentioned you joined the company or joined the board quite recently. Can you give us a bit of background on that, please?
Yeah, sure. So I joined as a result of an investment that I made through my fund at the time called Redfield. We took a view on the company that it had some great assets. It recently picked up a portfolio of assets the year prior from Seafield. we felt it presented some compelling value, and there was a lot of opportunity. The upside there, especially when you compared Metminco to a number of the other companies and assets that we looked at, was quite compelling. I mean, certainly trading it at the time, I think it was trading less than $7 a resource ounce, with an asset that we felt could get financed and had very near-term production potential, and certainly a portfolio of larger exploration assets. And there was a lot that we felt could be done with the company in its state. And so that was sort of the genesis for my investment, my involvement with the company. My background, I mean, I've been involved in finance for a number of years. I've run a couple of funds, and sort of a background in investment banking and M&A.
So in short, you felt that it was, from the opportunities you'd been seeing, it was clearly striking enough that you wanted to get personally involved as well as the fund involved.
Yeah, absolutely. I mean, look, I think from my perspective, evaluating a company, what we wanted to see was the potential for a re-rating of that stock, and where the value within the company lay, and how we could actually help extract that value. And so certainly from a re-rating perspective, as you move up the curve from a developer to a producer, that was quite, at the time we felt that was quite compelling, and that's still certainly the case.
Okay.